2024, Indian share markets experienced significant volatility due to both domestic and global factors, with Sensex and Nifty seeing substantial gains. The general election, followed by government infrastructure investments, propelled market growth. Global conditions such as rising oil prices and US Federal Reserve rate cuts also influenced stock performance. The IPO market surged with record numbers of listings. Experts remain optimistic about the future despite potential external risks, advising a focus on high-quality stocks or mutual funds in 2025. I leave you with the special report. Thanks for watching.
Indian share markets experienced a roller coaster ride in 2024, driven by a mix of domestic and global events that caused significant volatility. The Bombay Stock Exchange's 30-share benchmark index, Sensex, gained over 6,000 points compared to its closing level at the end of 2023. Similarly, Nifty, the benchmark index of the National Stock Exchange, added nearly 2,000 points in 2024 over its closing level in the last trading session of the previous year.
The year 2024 was a year of a big traction in the market. We have witnessed significant volatility and action in the market. We have had unprecedented elections in the largest democracies in the world. Most countries have gone through the elections, and also colored with a lot of geopolitical events where multiple countries going ahead with the escalations and war, and also significant actions coming from the central bankers. On the bedrock of so many events, we had a very volatile year, but at the end of the year, markets, equity as an asset class has been an outperformer compared to all other asset classes.
So Indian markets are amongst the best performing markets in the world. Naturally, India's young population with high technology orientation is going to have a very nice 25-30 years going forward. Broadly speaking, because the last quarter had an issue on the infrastructure spent by government because of the elections. Now that has started picking up, and I think when you see the quarter 3 financial 25 growth rates and all, you will see that it has climbed up already. And overall, India will do well as a financial year put together, but also for 25-26 going forward.
The 2024 general election was the first major domestic trigger for the markets, influencing investor sentiment due to uncertainty over the election results. Post-election, the government boosted infrastructure spending, which energized sectors such as construction, steel and cement.
I think the biggest event for the market was the middle of the year general elections in the country, whereafter the market surged to record levels after some reactions because of opinion polls and so on and so forth. That, for me, was the biggest event as far as the market is concerned. Then after elections, the surge in infrastructure investments by the government, because there was a policy paralysis because of the model code of conduct. But soon after the elections happened, the big push came from the government for infrastructure investment, which took the markets to more than 26,200 levels as far as Nifty is concerned.
The market also responded to global economic conditions, with rising oil prices driving gains in oil and gas stocks. The technology sector remained a key contributor to stock market growth. Tech giants like Infosys, Tata Consultancy Services, Wipro and HCL Tech ended the year with gains. The market also reacted to the US Federal Reserve's announcement of 3 consecutive rate cuts, which lowered the policy rate by 100 basis points. The Reserve Bank of India's decision to hold domestic rates steady provided stability to the market, directly influencing the banking sector and financial markets.
Fed's decision to cut the interest rates in the US ideally should have had a very, very positive impact on the banking and finance sector. But correspondingly, the Reserve Bank of India decided not to reduce the interest rates for the time being, because of the inflation concerns, particularly food inflation. So which has sort of brought in a bit of stability in the banking and financial sector in India.
2024 also witnessed a surge in IPO activity, with the BSE IPO index rising by almost 35%. IPOs from tech and consumer goods companies provided crucial support.
after 2021, a record collection of more than 1 lakh crore by IPOs. We saw more than 50 rounds of IPOs coming in this year. There was almost a boom in the IPO market. And this can only happen if the markets in general are performing very well. Otherwise, new companies or new investments would not attract attention from the investors and they get discouraged. So this was a good sign for the market.
We have been the economy having the largest number of IPOs. Last count I think I did was 198 IPOs, out of which most of them were SME IPOs, but more than I think 55 IPOs were main board IPOs. So I think India is currently doing well in IPO, but naturally country of this size growing at this pace might require probably many more companies every year for next 25-30 years to come and list themselves and create wealth for their founders, but also for the rest of the economy.
As the year comes to a close, analysts attribute the largely positive trend in equity markets to robust domestic liquidity, strong fundamentals of the Indian economy, and policy stability. Experts predict that Indian equity markets will perform well in 2025, although there are potential downside risks due to external factors such as a likely escalation of tensions in the Middle East and between Russia and Ukraine.
I think India is best placed in terms of a macro environment. We have a political stability in India. After the general elections, whatever skepticism was there, that is no more there. We've seen the outcome of state elections, favorable outcome for the incumbent government, and we believe that with the political stability, growth coming back, I think Q3 will show us that we are on track to the growth.
Well, I see a further push from the government on the economic reforms and the liberalization measures, which will definitely propel the market. We are seeing more of infrastructure investments coming from the government to take India to being a developed economy. I think that impetus would definitely be speeded up during this year. Apart from that, I think the push on technology and digitalization is further going to boost the market sentiment.
Investment experts also recommend focusing on high-quality companies with strong fundamentals or opting for mutual funds with a focus on asset allocation in the year 2025 to minimize risk.
One should focus on a very high-quality companies only. Do not look at the just overall indices level, or do not get colored with the views on the sectors. Go ahead and do your study and focus on the bottom-up stock picking, high-quality counters where promoters have high integrity, where you have a good earning growth as well as visibility on a good business model. I think these should be the parameters while analyzing these stocks. And if one can't devote their time and energy and resources on analyzing these counters on their own or the companies on their own, I think mutual funds are a great route, and focus on the asset allocation based on their risk appetite is definitely one way to mitigate the risk.
There is also widespread optimism about the performance of mid-cap and small-cap stocks in the coming year, driven by factors like strong domestic consumption and government infrastructure spending.
If you like this video, then like, share and subscribe to ET Now.